Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of United States Steel, ticker symbol X. All right, what we're looking at here is the weekly chart of X back to 1991, and you can see that it really didn't go to new highs. Like here's 2000, as the markets and everything went to new highs, it kind of just rolled over and slowly went down. And here in 2003 at bottom, and then it participated in that great commodity bull market. And right here peaked in June 2008 when oil hit $150 an ounce and all the other commodities were going through the roof too. Then it had the big collapse, bounce back, and I think we're getting, so this, what I think we're seeing here, I think this is a, and I should probably blow these up, but I think this is an A, and I think this is B. And I think this move down here to the bottom down here is C. Okay, so I think United States Steel is corrected, and it's going to be interesting if we're starting to see a rally in commodities or something, or commodity related. That's going to be interesting to watch. I think there's also the possibility we've got a head and shoulders forming here. So it's broken this trend line, which is bullish. We're also getting divergence on a couple of the indicators, not all of them, but like on RSI, the RSI did not go to lower lows as this pushed down on the final moves down to the downside. And the same thing with DI minus. DI minus did not go to new highs. So it's very interesting. You're getting the moving averages aligned. They're pushing to the upside. This trend line broke, and now I think we've got this neckline. I think we've got a shoulder, a head. Here, let me draw it for you. I think that we've got this and this and this. And it's interesting that we have this kind of a move, which is just kind of the opposite of this move. The symmetry is looking good. You know, I like it when I see symmetry like this because it makes me feel better about the picture and that something is coming together. All right, let's go ahead and take a look then on a daily chart and look to see. Now, on a daily chart, let's take a look at the head and shoulders again. This was a double top that we had over here, had a projected move down here, easily made it. Had some other things I've been looking at because I've been using this for some other things. But we had this nice big move in here, and now we had this ABC pullback, a zigzag pullback. And so you sit back and say, well, did it retrace enough of that pullback? Okay, let's measure it out. From the whole rally, it retraced over 50%. Okay, so that is well enough of big enough of correction to satisfy, say, a wave 2. If we're saying that this is like a wave 1 starting off of a new impulse wave, and let's call this wave 2. Okay, so now I think we're in wave 3. That wave 3 is typically the strongest waves, and it makes sense that it would be the one that would approach the neckline and blast through the neckline if that's what we have on our hands. And it seems to be lining up the moving averages. This is the 233 day, the 55, the 21. And I like to use Fibonacci numbers for the moving averages. It really doesn't make that much of a difference. It's just, I just like Fibonacci numbers. I think they make a whole lot of sense and they tie back into a lot of different things. So now, on the other hand, my trigger line is a 10-day exponential moving average. So these are simple moving averages, but they're all aligned. I like to see when the 10 breaks above the 20, and when the trading gets above the 10, it has a tendency to ride it. Now here we got this correction pullback, but now it's going again. So I probably should be in this stock right now, but I'm not. So I'm going to be looking for another way to have a setup and an entry point in it. Right now, when I look at it is trading up 25 cents today, 27.72. This is close as of Thursday, the 24th. All right, so that's the picture on U.S. Steel. Looks bullish to me, and looks like it's going to want to push a lot higher. All right, this is Joe for Beyond the Chart. If you found the video helpful in any way, please share it on social media, tweet it, share it, embed it in one of your messages or one of your blogs or whatever. And if you are not a subscriber, please subscribe, because then you can get updates on when I have blog posts, access to the Trade Ideas webpage, and other things that we've got coming out. And you get to download the free PDF I've got out there, the 5 essentials for traders. All right, thanks for stopping by. We'll see you on the next video.